the continent in the context of an integrated trading area in the broader.
The announcement landed like a thunderclap. On August 21, 2025, President Duma Gideon Boko revealed that Botswana had struck a staggering $12 billion investment deal with Qatar's Mansoor holdings. It's being called the most ambitious foreign capital commitment in the country's history. For a nation with an economy valued at around $20 billion, the scale of this deal is almost unimaginable. It represents more than half of Botswana's annual GDP, a figure that could completely reshape the nation's future if managed effectively. The agreement, signed in partnership with the Botswana Development Corporation, will channel billions into infrastructure, energy, agriculture, mining, diamond refinement, tourism, cybersecurity, and defense. This is not being framed as just an economic bailout, but as a master plan, a blueprint that could transform Botswana into a diversified and resilient economy within a decade. The symbolism of the signing was as important as the money itself. A high-powered Qatari delegation arrived in Gaborone a day before the announcement, underscoring the seriousness of the mission. Their presence, alongside senior officials from Botswana's state-owned investment arm, reflected the formal bridging of two very different economies: a small southern African state on one side and a Gulf powerhouse flush with petrodollars on the other. President Boko, who took to social media shortly after the deal, called it historic. His words carried weight for a population tired of economic contraction and eager for relief. But this is about more than just financial rescue. Botswana has long been hailed as one of Africa's rare success stories. Since independence, the country has been celebrated for its stability, transparency, and prudent management of diamond wealth. It avoided the corruption and conflict that trapped so many resource-rich nations. But even well-managed economies have vulnerabilities, and the downturn in the diamond market over the past few years exposed just how dependent Botswana remains on a single commodity. The choice to anchor the next phase of national growth in such a sweeping foreign investment deal reflects both ambition and necessity. And the timing of the announcement made it even more significant. Just days earlier, President Boko attended the African Union Summit in Addis Ababa, where leaders debated Africa's place in a shifting world order. Themes of sovereignty, industrialization, and independence from Western influence dominated the discussions. By unveiling the Qatar deal against that backdrop, Botswana tied its national future to a broader continental narrative, Africa building new partnerships on its own terms. The breadth of the sectors included in the agreement signals Botswana's shifting priorities. Infrastructure projects are expected to modernize roads, transport hubs, and digital networks. Energy investments will expand power generation, with expectations of renewable initiatives alongside traditional sources. Agriculture funding will strengthen food security and boost export potential. Tourism investments will enhance Botswana's ecotourism appeal, already world-renowned thanks to the Okavango Delta and vast wildlife reserves. Mining and diamond refinement will receive major funding, aiming to keep more value within the country by cutting, polishing, and processing diamonds locally instead of exporting them raw. But perhaps the most surprising elements are the investments in cybersecurity and defense. Botswana has historically kept a low military profile, relying on stability and diplomacy rather than force. The inclusion of defense cooperation with Qatar signals a new awareness that in today's volatile world, even stable countries must protect their sovereignty. Cybersecurity, too, reflects Botswana's recognition that its future lies not only in physical resources but also in safeguarding its digital economy against external threats. Global analysts are already weighing in. Some see this as part of a broader Gulf strategy to deepen influence in Africa, while others argue it's evidence that African nations are learning to leverage new partnerships beyond the West. Either way, the symbolism is powerful. Botswana, a relatively small state, has shown that it can command billion-dollar commitments when it plays its cards strategically. Still, the deal raises a fundamental question. Why would a country long celebrated for its diamond wealth suddenly depend on such sweeping foreign investment to stabilize its economy? To answer that, one must revisit Botswana's relationship with diamonds. Since the discovery of rich deposits in the late 1960s, diamonds have been the foundation of Botswana's economy. They funded roads, schools, hospitals, and lifted the nation from poverty to middle-income status. For decades, Botswana was synonymous with the diamond miracle. But reliance on a single resource is risky. Diamonds still account for around 80% of Botswana's export earnings, meaning global demand fluctuations hit hard. When the luxury market thrives, Botswana prospers. But when demand falls, as it did during the 2024 downturn, the entire economy suffers. Global consumers tightened spending, major traders scaled back, mines reduced production, and government revenues plunged. Suddenly, Botswana faced economic contraction not because of corruption or war, but because of dependence on a single commodity. President Boko, elected on a platform of reform, realized that the future could not rest on diamonds alone. Diversification became the mantra. Yet agriculture was constrained by arid conditions, tourism lacked infrastructure to scale globally, and manufacturing was underdeveloped. Technology and cybersecurity barely existed as economic pillars. This is why the Qatar deal carries such weight. It's not just money, it's a roadmap for transformation. Agriculture will be modernized with irrigation, mechanization, and research partnerships. Tourism will expand with new eco-lodges and diversified experiences beyond safaris. Energy investments will reduce dependence on imports and expand renewables. And perhaps most importantly, diamond refinement will shift value creation from abroad to within Botswana, creating jobs and positioning the nation as a hub for luxury goods. The choice of Qatar as a partner is also telling. For decades, Botswana's financial relationships were shaped by the West. European markets for diamonds, Western banks for credit, and institutions like the IMF and World Bank imposing conditions. Botswana managed these pressures better than many peers, but Western capital always came with strings attached. Qatar, flush with hydrocarbons, represents a different kind of partner. Gulf sovereign wealth funds are seeking high-yield investments abroad, and Africa is increasingly attractive. Unlike Western institutions, Qatar's money is presented as partnership rather than conditional aid. For Botswana, the appeal was clear. From Qatar's perspective, Botswana offers a stable and resource-rich foothold in southern Africa, a region less penetrated by Gulf investment compared to East and North Africa. It also provides access to the Southern African Development Community, a powerful regional bloc. For Doha, the deal enhances its reputation as a constructive global partner, building influence far from the Middle East. Yet buried in the agreement, the inclusion of defense and cybersecurity investments reveals deeper strategy. Geography matters. Botswana may be stable, but it sits in a region marked by insurgencies, organized crime, and rising cyber intrusions. Stability today cannot be assumed tomorrow. By strengthening both physical and digital security, Botswana is future-proofing its development. For Qatar, these sectors create long-term influence that goes beyond economics. If Qatari firms help build Botswana's cyber and defense infrastructure, they embed themselves deeply into the nation's fabric, creating ties that are hard to unravel. Critics worry about sovereignty risks, but supporters argue it diversifies Botswana's security partnerships and reduces dependence on Western military aid. Ultimately, this deal is about more than Botswana. It reflects a continental shift. Across Africa, leaders are rejecting old patterns of dependency and instead leveraging multipolar competition to their advantage. China, Russia, Turkey, India, and the Gulf are competing with the West for influence, and African states are using that competition to secure better deals. BY timing the announcement with the AU summit, President Boko tied Botswana's move to Africa's broader agenda of sovereignty and self-determination. The Qatar deal is not aid, it's an investment. Not charity but partnership. The question now is whether Botswana can deliver. If successful, the $12 billion deal will diversify the economy, transform industries, and secure the country's future. It will also serve as a model for other African nations seeking to reinvent themselves in a multipolar world. If it fails, critics will say the risks of over-reliance on foreign partners prove too high. Either way, the stakes are continental, because this is no longer just about Botswana. It's about whether Africa can finally leverage its bargaining power to transform its destiny, and whether nations like Botswana can lead the way into a new era of independence and strength.